Ladies and gentlemen, good day, and welcome to the HLE Glascoat Limited conference call to discuss the acquisition of the assets of Omiras GmbH, Germany. As a reminder, all participant lines will remain in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal the operator by pressing star, then zero on your touchtone telephone. Please note that this conference is being recorded. I will now hand the conference over to Mr. Parth Patel from MUFG Intime IR for opening remarks. Thank you, and over to you.
Thank you, Brian. Good afternoon, everyone. Welcome to the HLE Glascoat Limited conference call on acquisition of assets of Omiras GmbH, Germany. Today on this call, we have Mr. Alap Patel, Whole-Time Director, Mr. Harsh Patel, Whole-Time Director, and Mr. Nilesh Ganjwala, Senior Advisor. This conference call may contain certain forward-looking statements about the company, which are based on our beliefs, opinions, and expectations as of today. Actual results may differ materially. These statements are not guarantees of future performance and involve risks and uncertainties that are difficult to predict. With this, I hand over the call to Mr. Harsh Patel for the opening remarks. Over to you, sir.
Good afternoon and warm welcome to all participants. Thank you for joining us today to discuss our recent acquisition of Omiras GmbH. It is my privilege to welcome you all to this important call where I share with you another milestone in HLE Glascoat's journey, the acquisition of certain specific assets of Omiras GmbH and its wholly owned subsidiary, Omiras Store GmbH, through our wholly owned step-down subsidiary, HLE Surface Technologies GmbH. As you may recall, on 14th August 25, we had informed the stock exchanges about the execution of the definitive agreements for this transaction. I am pleased to update you that as of 18th August 2025, HLE Surface Technologies GmbH has completed the acquisition of certain specific assets of Omiras GmbH, which also includes all shares of Omiras Store GmbH. This marks the formal conclusion of the acquisition process. Omiras is a company with an illustrious 187-year heritage in Germany, specializing in architectural facades, vitreous enamel coating, and advanced metal processing. Through Omiras Store, it also markets glass fused to steel tanks and silos, ranging from 8 cubic meters to over 20,000 cubic meters in capacity. These modular bolted tanks are widely used for storage of potable water, wastewater, sludge, industrial liquids, animal feedstocks, biogas, and grain. Omiras has successfully delivered 350 tanks in Saudi Arabia alone in the past decade, highlighting its international credibility. Omiras has a 21,000 square meter facility in Lauterbrunsbach, Germany, which is a symbol of its engineering excellence and capability. Let me briefly touch upon Omiras' recent financial performances. In 2024, Omiras reported revenues of Euro 21.9 million with a gross margin of 54.3%, reflecting the inherent strength of its product line. However, due to pandemic-related disruptions, surging energy costs in Europe, and delays in certain large project executions, the EBITDA margin compressed to 4% with a negative PAT of Euro 0.46 million. Omiras has historically demonstrated the ability to generate steady and growing revenues and resilient gross margins. We believe that with HLE's engineering skills, financial discipline, supply chain efficiencies, and customer access, we can turn the business back to sustainable profitability and growth. The high order visibility in silos and facade segments gives us confidence in a near-term recovery. This acquisition is transformational for HLE Glascoat. We are extending our core strength in glass lining from chemical process equipment into infrastructure, architectural, and renewable energy applications. Omiras' European base opens door in Europe and the Middle East while also positioning us for tender-based projects in Asia Pacific, Africa, and Latin America. Our portfolio now will include large storage tanks, silos, biogas digestion tanks, and architectural panels, which helps reduce dependence on our traditional chemical and API industry clientele. Operating out of Germany also enhances our brand, aligning with premium engineering standards, which are recognized worldwide. The timing of this acquisition coincides with powerful industry tailwinds. The European Green Deal and the broader energy transition agenda are driving strong investments in renewable energy and biogas projects, directly supporting massive demand for digestion tanks and sustainable construction materials. Global investments in water and wastewater infrastructure are projected to exceed $100 billion annually by 2030, a market where modular storage solutions like Omera's tank offer speed and durability advantages over concrete. Governments worldwide, particularly in the Middle East and Asia Pacific, are modernizing transport hubs, tunnels, and clean rooms, creating a long runway for architectural enamel-coated solutions. By combining Omera's installed base and credibility with HLE's global customer network of more than 1,500 companies, we will unlock strong cross-selling opportunities. While Omera's faced financial headwinds, the fundamentals of its business remain robust. With our strong balance sheet, manufacturing expertise, and disciplined execution, we are confident of reviving Omera's profitability in the short term, scaling its operation and positioning it for long-term growth. This acquisition also significantly enhances HLE Glascoat's role in global glass lining ecosystem, from chemical plants to storage solutions, from silos to architectural facades. This acquisition will help us in broadening our horizon and strengthening HLE Glascoat as a truly diversified global engineering and technology company. We firmly believe this is a value-accretive acquisition that enhances growth, visibility, further diversifies our portfolio, and aligns us with global sustainability priorities. With that, I would now request the moderator to open the floor for any questions. Thank you.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use their handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Supreet D. Patil from Eyesight Fintrade Private Limited. Please go ahead.
Good afternoon to the entire HLE team. My question is, now that Kinam is fully integrated and working in oil and gas traction, how are you planning to scale its engineering capabilities for high-spec global clients? Are you considering any facility upgrades, automation, or joint design platforms with Salatech to meet international standards faster? What is the guidance of the company on this? Thank you.
Hi, good afternoon. You very rightly said that we are targeting oil and gas and petrochemical clients in the Kinam segment of the business. To do so, a large portion of the required skill set is already available within the company. We are already equipped to meet many of the global standards, be they, whether they are related to heat exchanger design specifically, or pressure vessel design such as PED or U-stamp. Also, certain skill sets which may not be available at Kinam currently are existing elsewhere in the Indian operations, in the sense that our F&D and F&D and glass-lined divisions are well equipped to design as per EAC, which is Russian norms, GIS, Cello, which is for China, so on and so forth. So we are pretty well equipped to cater to pressure vessel and heat exchanger needs across the globe. And to do so, any further inputs from Thales are not really necessary at this stage.
Just a follow-up and my final question. Are you building a new pricing or a delivery model that reflects higher customization and margin potential?
Is this in relation to Kinam?
Kinam.
So if you look at how Kinam currently operates, they are already in a customized heat transfer solution space, which is already quite differentiated from the traditional fabricators who are offering similar products to the chemical and pharma industry. And we are also able to do so in a very large volume. So we are currently in a position to execute close to 3,000 heat exchangers per annum. So that is already in a way a space that we are working in, and we are working in quite effectively.
Okay, great. Thank you very much, and I wish the team best of luck for the next Q2.
Thank you so much.
Thank you. The next question comes from the line of Ajay from Niveshaay Investment Advisors. Please go ahead.
Thanks for the opportunity and congratulations on the acquisition. So my question is, will HLE be liable for any outstanding debt or any other liabilities beyond the acquisition amount? And if you can also provide more details on the specific immovable property included in the acquisition agreement, because there was no breakup of the 2.75 million euro transaction. And if you can also break it further into how much, because we are going to acquire specific assets of Omera, and we acquired the complete shares of Omera Stone. So if you can break this amount, that will be helpful.
Thank you for your question. I think we are specifically acquiring only the specific assets of Omera's, which also includes the 100% shareholding in Omera Store, which was its wholly owned subsidiary. So we are not acquiring any liabilities of Omera's. We are only acquiring specific assets. We are acquiring some trade liabilities of Omera Store, because Omera Store has no other third-party liabilities other than certain trade liabilities. So, and those trade liabilities are very, very, very small. We have already done a detailed diligence before completing the transaction. With respect to the question on the real estate, we are by virtue of this acquiring roughly about 21,000 square meters of land, and there is a constructed factory building on top of it. So we are acquiring the land and the building. The current market value is a little under €1 million currently. We also acquire the entire equipment, which has not been independently valued, but the value is considerably higher. We also acquire the intangibles, which include the brand Omera's, as well as the entire technical know-how related to the manufacturing process, as well as the specialized products that they manufacture. We also acquire the entire inventory as on the date of transfer, which includes all the inventories that they currently have, whether it be raw materials, work in progress, or finished goods. And we have also taken over the entire order book on a specific order basis. So we have picked the orders which are profitable and left behind the orders which are not. So we also have acquired the specified members of the team, which we believe will be required to continue operations of the business, which includes management at all levels of the business.
Thank you, sir. That gives a lot more clarity. Sir, another question is regarding the acquired business operations. If you can mention what is the current order book, because we mentioned in the document that we have a healthy order book and expect to turn it around a little fast. So if you can mention what is the current order book and its composition by product type, like between tanks, facades, biogas, and also by geography, because how much is it based completely? Is it how much is it based in Europe or Germany particularly? And lastly, because there were some order delays on these recent orders, so what is the potential impact of existing penalty clauses on the near-term revenue?
Maybe I'll take your last question first. We are not taking over any of the orders which are related to the EPC business, which is the business which led to these losses. In any case, in none of the cases is there any risk of any delayed execution or delayed delivery charges or any such. So we are not taken anything or any order which carry those let's say past liabilities or obligations as far as the orders are concerned. With respect to the total order book currently, which is the order book is partially executed, is roughly in the range of about 7 million euros. And we have a order book of about 28 million euros, which is currently under negotiation. As and when these are finalized, these will then be executed over a period of maybe 12 to 18 months.
And clarify, the 28 million is the inquiry pipeline.
Yes.
Yeah.
Yes.
Correct. And by product composition, would it be possible to give a breakdown of these, like how much it would be tanks, facades, or biogas?
So it's a mix of tanks and facades currently. Biogas is something which is still under discussion. So the numbers that I have provided for you do not include biogas.
Okay. And sir, there seems to be a difference between the architectural product portfolio, because if I go and visit the Omira, the holding company website, and the product shown under Omira Stone. So, and given our existing product portfolio of glass lines and reactors, so I was not able to completely understand the synergy. So if you can explain how these architectural panels will be integrated into our existing product line, and how can we leverage these with our customer base and the current application of our product?
Yeah, that's a great question, because that's also the question that we had to answer first before we considered acquiring, the business or assets of Omira and Omira Store. Primarily, our interest in the business stemmed from the tanks and silos business, because that's what has the maximum opportunity for cross-selling to our existing customers. The way that these panels are made, the manufacturing process is fairly automated. And the way these are manufactured, or rather the facility in which the panels are manufactured, whether it be panels for architectural or whether it is panels for tanks and silos, they are manufactured in an almost identical process and almost in the in a facility that overlaps almost to the tune of 80-90%. So to have volumes for the business, I think the architectural and facade business primarily ends up being a very good volume driver for the business, because as you may understand, a single tunnel project could have several thousand square meters of panels which need to be lined. And it also gives us a very good visibility, because these are usually 6-month, 12-month, 18-month supply period. So it gives us certainty of volumes. It also gives us not just certainty but also
the overall size of the manufacturing facility is fully utilized. What we also realized when we dug deeper is that these are not just any architectural panels. Enameled panels are quite specialized and they can be very high-end. So with the capability of Omeras to manufacture in a variety of different finishes, in different functional, design, especially the back ventilated enamel panels that they make, enameled or glass-lined panels that they make, really set them apart from any of the competitors. So while on one side it's the same facility, it ensures capacity utilization, but on the other hand, it also gives us access to some very unique and niche markets. Also, this fits quite nicely with our thrust on also diversifying away from our let's say reliance on the chemical and pharmaceutical markets. So while the end application is different, the manufacturing technology required for this is exactly identical to that for tanks and silos. I hope this gives you more clarity.
Yes, sir. And sir, on a strategic level, like because when we acquired Thalatech, we soon introduce those products into India. So are there also plans for these products of the new acquired acquisition to market into the Indian market? Or is it just like will be focused on the export geographies?
Yeah, so we have clear plans to manufacture and market these products in India. India is a growing market for biogas. A lot of infrastructure projects are ongoing right now in India, especially for metro rail. For a lot of tunnels are being built. So there is a clear possibility of introducing these products in India, and we are, as we speak now, we are developing a roadmap for introduction of these products in India.
Got it, sir. And sir, based on the assets which we have acquired, and like if you can highlight like how much revenue can they generate at a optimum utilization level, and because we have also acquired a sizable land. So, is there any immediate capex that we are looking to incur over there, or is it is there any plan to incur capex in a near timeline? If you can also outline that.
Based on the current installed capacity at Omeras, I think the aggregate capacity utilization is right now around maybe even below 50%. So there is substantial scope for further growth without any major capex requirements. So there may be some incremental capex for balancing equipment and things like that, but there is no major capex that is envisaged in the near term. In terms of the land, in terms of the land available for the expansion, yes, there is land available, but again, there is no immediate plan to build more capacities.
No, sir. I'll just repeat my question. I mean, because we are acquiring just specific assets of Omeras, and Omeras does close to around 200 crores of revenue based on current conversion of euro to INR. So I'm asking on the basis of the assets which are acquired, how much peak revenue can that generate?
As I said, we are working at the 200 crore rupee equivalent revenue is roughly at about 50% of the capacity.
But we are not acquiring complete Omeras. That's what.
No, we have acquired all the manufacturing infrastructure. We have acquired in total. We have acquired it entire.
Okay.
The entire manufacturing infrastructure has been fully acquired.
Okay, and because currently we have, as we mentioned, the order book is currently around 7 million euros, and the pipeline also looks healthy. So, and we have a very good history of turning around business in quite a good timeline. I mean, be it Thalatech or Kinam, which we have acquired from maybe liquidation or NCLT. So, I mean, is there any similar timeline which you are working upon, or do we even see this to turn around at a faster pace? If you can also share your thoughts around that.
So I think we are looking at this to be a healthy, profitable business within a time horizon of about 3 to 4 quarters.
And the margin profile, I guess in yesterday's interview, Alap sir also mentioned the margin for the same is going to be double-digit margins. So
Yes, that
if
is
you can,
correct. Yes.
so would it be similar to our glass-lined business margins which we have in Thalitech, or it would be different?
I think considering the cost structures that we have evaluated as well as the margin profiles and the gross margins, etc., we believe that this business will also provide a similar operating margin and a net profit margin comparable to Thalitech, yes.
Got it. And sir, I'd like to squeeze in one more question. I mean, because the product portfolio, the silos, the tanks, facades, and the biogas side, I mean, if you can share more insights on the market and the competition side. Obviously, Omeras has a history of 187 years, but from what we are able to gather, they have a history of delayed orders. So if you can also highlight on the competition side, like how are they placed and how does Omeras differentiate itself among the big market opportunity which it presents?
Yeah. So there are a couple of players of size similar to Omera in this space. So when I say this space, let me clarify. There are a couple of players of Omera's size in the tanks and silos business. There are also other players who specialize in the architectural facade business, but Omeras is the only one who actually masters both. So there are very, very few players who are actually able to deliver quality products in both these spaces. I would say the players for the tanks and silos are located in North America and Europe largely. There are also a few in China, but they are largely catering to the Chinese market. Similarly, also in the facade business, there are one or two competitors within Europe, but they are much smaller, and like I said, they only manufacture architectural panels.
So in the architectural business, actually there is no company in the world, as per our understanding, who can deliver at scale that Omeras can deliver, and so that is one big advantage that Omeras has.
Okay, sir. Got it. I'll come back and queue.
Thank you. The next question comes from the line of Karan Sharma from Credent Brokerage Services Limited. Please go ahead.
Hello, am I audible?
Yes, Karan, please go ahead.
Yeah. So my question was a little strategic in nature. Also could be stemming from the fact that my knowledge might be lesser in this area versus you. So I see some part of capital allocation recently entering Europe.
Hi, I'm sorry, but we can't really hear you. Can I request you to please speak up?
Yes. Am I audible now?
A little better, but
Yeah,
not really.
Better. Yeah. One second, let me check. Yeah. Hello, is this better?
Yeah.
Yeah. So my question was a little on capital allocation. So we have seen some part of capital allocation moving towards Europe in the recent times. And from what our reading suggests and what we have seen in history is basically, whenever Indian companies have gone on to acquire assets in Europe and Germany, they have found it difficult to turn it around. Means there might be larger acquisitions, smaller acquisitions, but it has been difficult. It has been a difficult task to turn these around. Now, us acquiring Thalitec and now Omeras in Germany, where usually the recent news flow has been around a lot of companies there, chemical and others, closing down or shutting down because it is unviable to run these assets at the cost structures that these countries have. So is there something different that you guys have seen probably which could help us or give us more insight into why this decision making into Europe? That is my first question.
I think firstly, I do not entirely agree, or we do not entirely agree that the industry or the industrial scenario in Europe in general is bleak. I think there are certain pockets, and there will always be certain industries which may not do well. But in general, for example, our experience with the Thalitec acquisition has been very, very good, as you would have seen. I think we have not only acquired it at a value which was very, very attractive, but we've also been able to build that business and generate both double-digit growth rates as well as double-digit margins. And you will agree that definitely speaks well for what we've been able to do with that company. With Omeras, the advantage is that it is already in a very, very highly niche area. So I think one other thing that we are very conscious about is in our selection of targets. Thalitec was a one-of-a-kind company and continues to be a one-of-a-kind, which competitors have found very difficult to emulate. Similarly, Omeras is also a one-of-a-kind business, which we are very confident they will be able to stay ahead of competition, if any, for several years to come. In addition to this, we are acquiring Omeras at a value which is less than its inherent asset value. So we are not even talking of business valuations here. More importantly, we are acquiring not just the business and its order book, but we are also acquiring the management team. We always look forward to continuity in terms of management and the capability that they bring with them. And this always has helped us in good stead in all our acquisitions so far. So we obviously want to look at it very closely. We do a very close study of the pros and cons of any acquisition, most importantly, sustainability and the management bandwidth. And that has also gone into the evaluation of this acquisition as well. So I think we feel very, very confident that we've actually got a jewel at a very, very affordable rate.
Perfect, sir. So thank you. If I may ask one more question. Hello.
Yes, please go ahead.
Yeah. So, second question was a little looking into the future. So a couple of our acquisitions or adjacencies have been into areas where we usually have not been in the past, like F&B and HLE. So Kinam with heat exchangers, architectural panels. So what does our capital allocation in the future look like? Would we be adding more adjacencies? Would we be exploring other countries also as well in these terms, or would it be like more internal, domestic oriented?
Yeah. So see, whenever we do an acquisition, we always look for certain synergies. So in all our acquisitions, whether it is Kinam or Thalitec or currently with the assets of Omeras, the synergy has been the inherent technologies that are required to manufacture these products. And in the case of Kinam and Thalitec, there is a large overlap of customers also. So the acquisitions have not been without strong synergies already present in the business. Similarly, the Omeras acquisition right now is basically based out of the strong synergies that emerges from the technologies that are used in manufacturing the products that Omeras is making. And on top, there is a synergy in the final customer base. So there is some cross-selling possible within that. So we are not going out looking for companies just for the sake of growth or acquisition. Only if we find value and synergies in a target, then we go ahead and look deeper into that. So there is no real plan of, we don't have a plan of looking for different kinds of companies. So we are not shopping. Let's just put it that way.
Perfectly said, sir. Thank you.
Thank you. The next question comes from the line of Dikshant from DB Wealth. Please go ahead.
Hello, management. Congratulations on our acquisition.
Thank you.
The first question is, let's say in the next 12 to 18 months, what kind of consolidated top-line growth can we see from our current numbers?
So I think in our earlier call, we had indicated our annual growth to be in the high teens, in the 16 to 18% growth rate, maybe on a consolidated basis. This could get closer to 20% looking at the current order book. So actually things are looking very, very encouraging in the existing business across all our segments. And of course, the Omera's addition will be a straight add-on over and above that. So I'm not putting a percentage terms to that because that will be a bolt-on addition in terms of our number. So I would say 12-month revenues maybe in FY27 for Omera's would be, we are expecting it in the range of between 20 to 25 million euros.
Got it, sir. So secondly, whenever we have done an acquisition, our opportunity has always been better. And you have mentioned on the call that operating margins would be better than our current businesses, or similar to the higher range of our businesses. So what kind of consolidated operating margins can we be expecting? Do you think we can go back to the high teens and more?
I think all our businesses have the potential to be in the mid to high teens, with the possible exception of Kinam, which is actually in excess of 20% in terms of operating margins. So I think on an average basis, mid to high teens is definitely something that we are aiming to achieve.
Okay. So maybe this is not relevant to our acquisition, but it might be relevant to the macroeconomic environment of EU. So EU has in this year really announced a huge defense budget. And generally it's seen that there has been some correlations in defense and infrastructure spending overall in the past cycles. Do you think, or has this one of our consideration while currently doing this acquisition, that we see better infrastructure growth in the EU space, or what kind of macroeconomic activity are you seeing there which is giving us more confidence?
Yeah, so many countries in EU are basically trying to diversify out of the dependence on Russian gas. And mostly this is happening via the biogas route, or some part of it is happening via the biogas route. And it is expected that the biogas market, the investment in biogas is roughly going to be 28 billion in the coming years, euro. And this was one of the considerations because Omera's has already has installations in the biogas storage facilities in, say, Italy, as an example. So this was one of the important considerations. Also, there is reasonable infrastructure push going on in Europe, and there are many metro stations either being built or being renovated because they have their system so old that now it's time for renovating stations. So this we have seen. In fact, we had as a part of due diligence, we met a couple of customers who were executing these underground tunnels or metro stations. to get a understanding of what is going on and what may pan out in the coming years. So that's also been a consideration. And this is on top of the basic tanks and silos, which is like an evergreen business going on. And also, I would like to add that this is a global opportunity. This is not just for EU, because if you have traveled across US, you would have seen that a lot of grain storage facilities are glass steel tanks, and Omeras is not even ventured there. So we also in the due course, we also intend to address those markets. There is also, apart from EU, there is also a macroeconomic factor, being that countries like, say, in the Middle East, they are building artificial cities, or I will not say artificial, they are building new cities. And when you build a new cities, like for example in Saudi Arabia, they need a lot of water, and a lot of sewage plants are coming up in those areas. And Omeras has already given some supplies to those kind of projects. So yes, we have taken into account a lot of macro and economic factors while taking this decision.
So, let's say a 20% growth on our top line for the FY26, and Omeras would be completely over and above. We are not considering Omeras as in this 20% calculation.
Yeah, that's correct. That is correct.
And what kind of growth can we see this year for Omeras for FY26? What kind of top line euro benchmark do we have in our mind?
So I think Omeras this year will not be a benchmark year for two reasons. One is, of course, because it will be consolidated only for partial period, since it will only be consolidated from the period of acquisition. So it will be only pretty much about a 7-month kind of a number that will get reflected. We also believe that we may take 2 or 3 months for reorganizing some of the internal operations, as well as ensuring that all the transition arrangements have been duly complied with. There are also some regulatory compliances that need to be ensured. So I guess I would say the next 1 or 2 quarters may not be reflective of what the acquisition stands for, which is why we believe FY27 will actually be a true indicator of what this asset can deliver.
Got it. And that would be in the neighborhood of 25 million euros.
That's correct. That is correct.
Okay. And last question, sir. How is our pharmaceutical business doing right now? What kind of upswing in the cycle are we seeing? Can you give us some sort of highlights on how the overall business right now is doing apart from the acquisition?
The pharmaceutical business, so when I say pharmaceutical, of course we mean the API part of it, is doing actually quite well. There has been, from last year to this year, has been a double-digit growth across the country, and even in Europe and US, we are seeing investments coming in the pharmaceutical industry. So, and we expect that this will continue to do well in the coming year or so, or 2 years, roughly.
Yeah. Do I have permission to ask one more question, sir?
Yeah, we don't mind, yes.
Yeah. So, this is much more from a larger perspective. Peptides in pharma is supposed to be a very big decadal theme. What kind of product innovation are we doing to make sure that the tools that we provide to the pharmaceuticals are in line right now? What kind of innovation strategy are we having right now? Because the GLP drugs are the first frontier drugs, but there are a lot more things that might come up from the research that we have been doing. So you being the pioneers in the tools industry for pharmaceuticals as well, could you help us understand this a bit more from a larger perspective?
Yes. It's a very interesting question, and also quite coincidental, because some of the equipment that is used for peptide production is also quite similar to the ANFDs and dryers that we manufacture. And we have already received orders and are in the process of supplying equipment for this application. So, while we had to do a lot of innovation fairly quickly, but I think we have been able to deliver on that front quite effectively.
But from a directional perspective, this is just the start of the peptide industry, right? This is just the beginning. Innovation would need much more investment from our end right now. It's just an assumption, sir.
Yeah, I would agree with you, but things are moving fast, and we are working to make sure that we keep up and actually stay ahead of the market. We may not be able to tell you everything on the call. Some of them, as you might understand, we are market sensitive, and yes, but we are on top of this. You can be assured of that.
Good to know, sir. Congratulations for the acquisition again. Best of luck to the company.
Thank you.
Thank you.
Thank you very much.
Thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, please press star and one. The next question comes from the line of Veer Vadera from Niveshare Investment Advisors. Please go ahead. Veer, if you can please unmute your line and ask your question.
Hello. Am I audible?
Yes.
Yeah, congratulations for the acquisition. I had few questions apart from the acquisition for the general business. So if we observe this quarter, the margins in glass-lined segment were lower as compared to previous quarter, and also if we compare to the competitors. Was it due to different product nature or due to different geography? And also, if we see this quarter, order book hits all-time high. So from which segment more order inflow has been observed?
So I think, first of all, I think the margin profile on different segments are also vary quarter on quarter. You must have seen our past history where the first 1 or 2 quarters are relatively, should I say, softer than the latter half of the year. So you will see margins and volumes building up. During the first quarter itself, I think the volumes have grown substantially in the filtration drying business as well as in the glass-line equipment business out of Europe. The Indian glass-line industry, the Indian glass-line segment is also seeing a good inflow of orders, which will start getting reflected in revenues and margins going forward. So I think we are hoping to maybe address your questions by actual performance in the next couple of quarters.
Okay. And also, as we got approval for amalgamation of Kinam Engineering, and as per my knowledge,
yes, please go ahead.
And as per my knowledge, we were going to issue shares worth of 78 crores of HLE Glascoat to the Mehta family. So how much dilution do we expect after this amalgamation?
So I think we have just had the final hearing of the NCLT last week, where the order has already been pronounced. The scheme has been approved in open court. We are of course waiting for the written copy of the order, which is expected in the next few days. So as we stand, the scheme has been approved. The total dilution or fresh allotment of shares is to the extent of roughly about 1.7% of the outstanding equity capital of the company.
Okay. And lastly, what would be the execution timeline across all the products of Omeras, including tanks, silos, and facades?
So it depends on projects. It really depends on projects. We could have execution timelines ranging from 5 to 6 months for plain vanilla tanks and silo, let's say smaller orders, to larger orders which can even take in excess of 2 years.
Okay. Thank you and congratulations for the great future.
Thank you. Thank you very much.
Thank you. The next question comes from the line of Vivek Gupta from Star Investments. Please go ahead.
Yeah, hi. Am I audible?
Yes.
So, My first question was, Omera's FY24 turnover was roughly around 22 million euros within EBITDA margins. So, what kind of margin profile and break-even timelines do you target post the integration? Just wanted to understand, like, what is the realistic EBITDA margin range you are targeting for Omera's in the next 2 years? And also how this compares with HLE's consolidated margin profile.
So I think we probably addressed this earlier in response to somebody's question. But I think over the next 1 to 2 years, we expect margins, EBITDA margins to be in the mid-teens, as we mentioned, in double-digit mid-teens, which will be broadly in line with the overall profitability profile of our European business.
Okay. So secondly, when do you expect the deal to become EPS accretive, and what is the expected impact on ROC and ROE?
So the deal will be EPS accretive in hopefully 2 quarters, worst case scenario 3 quarters. So I would say between 2 and 3 quarters. In terms of ROE, ROC, considering that we have acquired the assets and the Omera store shareholding at below its book value, it will be obviously extremely positive from a ROE, ROCE perspective. That we haven't acquired this at any business valuation or any multiple of any profits or revenue or any such thing. We have actually acquired it at a value which is less than the asset value.
Okay. So, my last question would be like, how does this acquisition affect HLE's capital allocation strategy? Like, should investors expect more inorganic growth moves in Europe, or will the near-term focus on consolidating this acquisition and also debt reduction on console level as directed during previous earnings con call?
I think the broad direction on debt reduction remains the same. We will pursue our strategy of keeping debt within very, very reasonable levels. So that doesn't change. The acquisition of Omera's doesn't add to debt, which has been entirely financed from internal accruals. And the value of the acquisition, as you are aware, is 2.75 million euros, which is somewhere in the range of about 27.5 crores. And really is not, from a balance sheet perspective, it doesn't stretch the balance sheet at all.
Okay. Thank you.
Thank you.
Thank you. We take the next question from the line of Agastya Dave from CAO Capital. Please go ahead.
Sir, good evening. Thank you very much for answering all the questions very patiently. Sir, a very simple question. So, when you acquire this company and it gets reflected on the financials, what is the asset block that will get transferred? And because you are doing it below book, I'm just trying to understand how the various accounting entries will happen. So, on the gross block side, what will get acquired? And on the working capital side, you said you're taking over some of the trade liabilities. Have you quantified that, sir, publicly?
So basically, sorry. Please continue.
No, sir, please. I'm done, sir. I'm done.
Okay. So the only value of trade liabilities that we are acquiring is 300,000 euros. So it's not material. So it's not material. So if you look at it from that perspective, my total acquisition cost goes to about 3.05 million. If you add let's say, the netting off of the trade liabilities. So the asset value is asset value at book value, and I'm not even talking of market price or any such thing. At book value is currently in excess of about 6 billion in terms of the book value itself. So we are discussing with our auditors to scale down the valuation down to our acquisition price, which is what IFRS or Ind AS requires us to do. We'll follow the accounting principles in this respect. But yeah, there will be actually scaling down of the valuation to bring it to our purchase.
Thank you very much, sir. That was what I was trying to figure out, and it was not very clear to me what exactly.
No. So I think the
happened.
intention is not to
Right.
bloat the balance sheet. The intention is actually to keep it.
Yeah, it won't. It won't. Yeah.
Yes.
Right. Sir, any pension liabilities, any off-balance sheet items? I'm pretty sure you're onboarding many of the employees. So how is that being handled?
We are issuing them fresh appointment letters, and all their existing pension has been fully paid out in terms of funded, and we have exactly zero carry forward pension liabilities.
And going forward, would you have to create any provisions for pensions?
Yes. So that will be part of our cost of the people that we acquire, take over others.
And it will flow through the P&L.
Yes, that will flow through the P&L. Exactly.
As in when the activity levels pick up inside HLE Group?
No, actually, we are treating that as nothing from the funds. We are treating that as a fresh cost for the services rendered.
Perfect, sir. And so finally, there was a question on need for CapEx in this particular company. So in terms of the condition of the equipment of the manufacturing setup, how is that? And what kind of maintenance CapEx would you require? And if you do try to expand, would you be like, now that you have access to the technology, would you be doing the expansion in India and continue to use the brand? Or would you do it in Europe? And what kind of like utilities and land are you like, do you have access to for future expansions?
Yeah. So as Nilesh Bhai had earlier mentioned on this call, we are currently at quite a low capacity utilization.
Yes, 50%. Yes, sir. I heard that, sir. I'm just trying to figure out. Yeah.
No. So there is really no CapEx required from a capacity point of view, right?
Right.
Also, from a quality of equipment perspective, the kind of equipment that they have are state of the art. Many of the equipment are also brand new.
Okay.
We have state of the art laser cutting lines for profile cutting of steel sections, for steel plates. There is also a fair bit of automation both in the metalworking and the glass lining parts of the business. So in terms of the quality of the assets, they are top notch, and I would be hard pressed to find a facility which is so well equipped in this space.
Great, sir. Then you have got a very good deal. Congratulations, sir.
Thank you. Thank you so much.
All the best, sir, and thank you very much for answering all the questions. Thank you.
Thank you.
Thank you. Ladies and gentlemen, in the interest of time, this will be the last question. I now hand over the conference to the management for their closing comments.
Thank you, ladies and gentlemen. I take this opportunity to thank everyone for joining in on the call. I hope we have been able to address all your queries satisfactorily. In case you require any further details, you may please contact us or MUFG in Time IR. Thank you again.
Thank you. On behalf of HLE Glascoat Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.